again, very different from my fellow speakers. We aren't looking for that exit strategy. We are looking to work with companies at the early stage and develop, and as they grow, we'd like to invest more, build up the skills base, and as I said, our return is very much the jobs and the wealth that are created in the economy. So a number of offerings we've got in Wales. We've got some good available property and soft landing areas for international investors. So Indian companies that are looking at Europe as a point. Wales has got the good connections into the rest of the UK and into Europe. So we can offer them that kind of initial soft landing. Is that initial seed funding we can put there. But not just the finance. We would look at developing any R&D that we can support with universities, any academics that we can put in, any mentors that we can also attract in as well, and just develop and grow that business. And once they're established in Wales, what we're finding is the businesses then are exploring other countries, and we continue to support them then in that development, looking at other parts of Europe. So it's very much a long-term relationship to us, and as long as those businesses are kind of growing, we have second, third, fourth rounds of investment into them, and developing and growing from there. So it's a long-term relationship for us, quite different from yourselves.
Okay. So Rajit, let me bring you here to my next question. If I really, rewind 10, 15 years back, I think the real challenge was to understand what the market opportunity is. For example, the first set of angel investors in YouTube asked, is going to be a peer-to-peer pornographic site? I mean, nobody's asked those questions anymore, perhaps. Because I would say the market opportunities are much more defined than what it used to be 10, 15 years back. But the challenge I see is each and every segment or subsegment that you look at is hyper-competition. So how does an investor today is straddling the environment, and is there a fundamental difference in perspective, how they look at investment and evaluate investment and what we used to do, let's say, 15 years back?
When you say hyper-competition, are you talking about among entrepreneurs or among
Absolutely.
investors?
I'm saying today for one opportunity, I see 25 startups trying to address the same problem in multiple ways. Right? 15 years back, it used to be slightly different.
Yeah.
So how does that change an investor perspective, and how do
Right. Usually in the beginning of any industry, you have a large number of entrepreneurs. For example, in the automotive sector, in the 1800s, late 1800s, there were 300 automobile companies in America. Today there are 3, I think, not including the American ones. They're down to 3. So as companies, as industries mature, they sometimes consolidate. Right? So we expect to see a lot of competition from our perspective in an industry. I think the key is to be different. So if you think about it this way, the way to create value for an investor or an entrepreneur is to increase the size of the pie, the industry pie. So let's say the industry profits are 100 crores. When a new entrant comes into the market, is that industry profit going to increase, or is it going to remain the same? If it's going to remain the same, that means the profits are going to get divided further. And that means less profits for everyone, and including the investor who invests. If the new entrant coming into the market is either bringing in new customers who would not have ordinarily been involved, or new suppliers, or reducing costs in some way, or improving productivity in some way, then industry profits will actually increase when that company comes in. So what we're looking for is companies who are going to actually increase industry profits, because we're more likely to get a slice of the pie if we increase the size of the pie.
And on that note, I met an entrepreneur some 2 years back, and he said, I have met close to 50 investors. So when I first go and meet them, they say, what's your innovative idea? What's new on the table? When I go with something new on the table, they said, where else have this been done? in the world. So I really get straddled. So as an investor, how do you really balance a fresh new idea and, you know, demonstration of the idea elsewhere or all that?
On average, we evaluate around 200 business plan a month, and I'm talking, some 3-4 years back when this was an issue, when people would ask, where else it has been done, can you show some proof of concept? But I think country as such have moved, away from those questions. I don't know, Akhil is still there, but we actually have moved away and we have started focusing more on team. Because we have burned our finger heavily on Me Too successful ideas where people were in industry, where PAT was 35%, growth 100%, and the company also got listed. We also got excited and invested heavily. And the investment, I think, was more on proven successful model rather than a team. And I think today almost all investors are emphasizing only on team. If you see, even at PE stage, people have invested and now they're struggling with each other, not because opportunity is bad, because there's no alignment, on thought process, governance issue. So if you have good people, I think everything else is mitigated. You can always, revalidate it. You can support. And most of the time, at least, people like us who invest, the successful company, we see them, change at least 1, 2, 3 times. So how does it matter, whether there's any successful business plan there or proof of concept there in first place? Because if they have to change, they have to change. So in my opinion, today, I think country as such, we have moved away from those, initial, where it has else been done, who else is successful. I think more emphasis is on team, more emphasis on, who's the founder, what's the background, what's their endurance limit, what's their flexibility, are they open to mentorship, which Sunil, I think, emphasized a lot. If those traits are there, I think you can always, work on interesting opportunity, you can support. But if you have a rigid governance issue, good opportunity, like it's just like, investing good horse but bad jockey, So I think we now focus more on jockeys than horse.